Fundsupermart, your online gateway to unit trusts.
Hi, what are the reasons for investors to consider Singapore equities? What are the driving forces for Singapore equities?
Yeah, when you invest in Singapore, you're really investing in a high-quality economy with high-quality companies. Now, the quality of the Singapore economy is very well known. It's received many accolades all over. But underlying this really are very high-quality companies, in our view, that are listed on the stock exchange. So these are companies where you have strong management, strong balance sheet, and steady cash flow. So we think that's very attractive for Singapore.
Why adopt an income perspective for Singapore equity exposure? How would the risk return profile be different compared to a more general investment strategy?
Right. Income investing, or dividend investing as it is also known, really plays into the strengths of the Singapore economy and its companies. If you invest in Singapore, you will get the highest dividend yield in Asia. And historically, half or more of your returns would have come from dividends. So we believe that if you adopt a dividend investing strategy, you will achieve a more steady return with a lower risk profile.
From an income perspective, which sectors or areas within Singapore equities are you the most optimistic on?
In our process, we look for two kinds of companies: dividend anchors and dividend growers. Let me explain. Dividend anchors are companies which offer an attractive level of dividends, steady dividends. These are companies which are often a little bit more mature. They operate in industries with stable dynamics, and they have strong competitive advantages, and usually strong balance sheets and steady cash flows. So industries of this sort are perhaps like telcos or certain tech industries. We also like dividend growers. Now, dividend growers are companies which not necessarily would offer such a high level of dividends, but we think that dividend will grow over the short term, either because they have strong growth prospects, or they may be maturing, whereby they will be using less capital expenditure to support their business, and so they'll have more cash to offer to shareholders. So these are the two kinds of companies that we like.
On the other hand, which sectors are not so attractive?
We are fundamentally focused in our process. So companies that we like less tend to be those with poorer fundamentals, or in this case, for dividend investing, or they may require high levels of capital expenditure to support their business, and thereby have less cash to offer as dividends.
What aspects of a company do you consider for its inclusion in the portfolio?
Right, as I mentioned, we are bottom-up and fundamentally focused. In particular, we look for two things. We look for companies with a sustainable competitive advantage, and that's because we tend to be fairly long-term in our investment horizon. We tend to look at 3 years plus, and therefore sustainability is very important for us. We also look for companies where there is positive fundamental change. That could come out from either a change in management or a change in the conditions of the industry or the company. And that's because we believe that positive fundamental change would impact positively returns to shareholders.
The Nikko Asset Management Singapore Dividend Equity Fund has its second largest allocation to the REITs sector, which have recently come under pressure for overcapacity issues. What is your take on this?
Right, I assume you mean that there's quite a lot of supply coming out in certain sectors. Now, REITs typically respond to increases in supply by trying to lock in or extend their leases well ahead of when the supply will come on. And we've seen Singapore REITs being very active on this front, especially in the office sector. And where they are successful in doing so, we think that the impact of the supply on their income would be very manageable. So we tend to like and we tend to invest in companies which are successful in doing so.
So what is your outlook for the three REITs category, commercial, residential and industrial, and which are you more positive on?
Right. What you should notice though is that Singapore REITs operate far beyond Singapore shores. So some of the sectors we like are not necessarily in Singapore. We like, for example, retail and office in China and Hong Kong. We like hospitals in Indonesia, and we like data centers all the world over. So these are some of the interesting categories which are actually available when you invest in Singapore REITs. But to answer your question, in Singapore, we consider perhaps the retail sector to offer a good value. We're also fairly bottom-up, so we don't necessarily select REITs just because we like the whole segment. So we like REITs for specific characteristics. For example, if the REIT is able to add on space and boost their income from a bottom-up basis, we have selected some of these names as well for our portfolios.